I'm so excited to have Joe Indoso, COO of Link2 on today. How are you doing, Joe?
Great, Linda. It's always a pleasure being with you.
I really want to talk with you about Link2 today because there's so much going on and so much is changing. But I also really want to capture some of the background and history of Link2 because even I don't know a lot about your early foundings and your very beginning. So can you take us back to the venture capital stage of Link2? What was the initial premise of Link2? Why was it formed and what was your vision for Link2?
So Link2 is actually a much older company than most people realize because they know us by the private investing platform that we have become today. And that was a platform that we launched in February of 2020. But the company at that point was about 11 or so years old. I met the founder of Link2, Bill Saris, who's today still our CEO and a dear friend that I've come to know in the years we've worked together to build Link2. But he had this company Link2 that he had run for 10 years before I met him. And most of the technology that they had built is the technology that we ended up pivoting to this new application for private investment. So the technology platform that Bill and our CTO and members of the previous Link2 had built were largely centered on mobile apps that would help community banks sort of move into the digital world and allow them to do a lot of very plain vanilla bank services and also communicate with their bank and understand what different services were, basically through a mobile app. So that was the one of the formative ideas that we had. But then the issue in 2019 when I met Bill was, how do you take that technology and a lot of the know-how that surrounded it, right, and direct it to a different market where you had much greater growth potential, where you had a much greater ability to create something that was differentiated and disruptive, meaning not something that was, the same as what 20 other folks were doing, but something truly unique and outstanding. And also a business model where we could own the customer directly, right? As opposed to the old business model of Link2, where in a sense they were captive to the community banks who own the customers themselves. And they were simply a technology provider to those banks. So out of that whole period of examination in 2019, came the idea of applying the technology towards private investing and disrupting the entire private investment space, basically by creating a very simple, easy, and affordable access point for regular people. So this is a class of assets and a type of investing that historically has been the domain of big institutions, venture capital funds, private equity funds, hedge funds, sovereign wealth funds, pension funds, you name it, but large institutional investors, not regular people like you and me, Linda. And so the idea was, can we create a platform that makes it very, very easy for regular people to systematically view very high quality investments and actually make them and then actually manage portfolios and have liquidity as well within those portfolios. So sitting there in 2019, these are all big dreams. They were purely ideas. There was nothing real to it, just our energy and our ideas. Link2 raised a very small amount of venture capital at that point, about 1.6 million and no more than that. And then we launched the platform using that capital. We launched a platform in February 2020. And so here we are today. And it frankly has been a near miraculous growth story since then. I mean, we obviously started at ground zero. On the day that we launched, there were literally 3 people working full-time in the company, right? Bill, myself, and Jared Reed, our Chief Technology Officer. And today we are about 65 people strong. We have over 5,000 active investors on the platform, and 35 plus thousand accredited investors registered on the platform, and over 160,000 users that are starting to explore the services, and at some point hopefully will convert and become active investors. And together that community has invested over 250 million in that period of time since we launched in 60 plus private companies, of which, by the way, 6 have had successful exits already in 2021 during that IPO window. So we aim to continue building this platform and making it bigger. The market opportunity is immense. The numbers I just shared with you, even though they represent huge growth from our zero base start, they are frankly the tip of the iceberg, because when you look at how many accredited investors there are, and these are the folks that are, from a regulatory standpoint in the US and other countries, allowed to invest in private companies, that number globally is about 80 million. So what we have in the Link2 community right now is a very tiny fraction of that total growth potential. And then on the flip side of that, when you look at the investable universe of private companies, well, there's roughly 3,000 or so unicorns today, with a cumulative private market value that's about 2.5 trillion or so. Right. So the 60 plus companies we've invested in so far are just a small fraction of the unicorns, never mind the non-unicorns. So unicorn in the tech world, Linda, is a private tech company with a private market valuation of 1 billion and above. So that's a very important segment of the market that we're focused on. But we also make investments in companies that are near unicorns, so companies that are not yet unicorns, but whom we believe have very strong potential to become unicorns relatively soon. And so we go in sometimes a little earlier and invest in those companies as well. And those represent another a couple of thousand companies in the private markets.
Wow, what a story, and what an amazing growth trajectory you've been on. And I just want to go back to those early days, and it's you and Bill, and you also attracted some of the top venture capitalists in the entire industry. I mean, Greg Kidd is invested in other very successful publicly traded companies, so he's sort of good at picking companies to invest in. Matthew Lemurl, also very good at picking what companies to invest in. How did you happen to attract them to invest in Link2?
I credit that introduction to Greg to Matthew. So Matthew Lemurl manages a couple of investment funds. He manages what is today probably the largest pure play blockchain technology fund of funds. And he also manages an angel investor fund. That angel investor fund, Kretzer Capital, was one of the participants in that round, that $1.6 million round that we raised back in 2019. Matthew, in addition to making that investment, introduced us to Greg Kidd, who is one of the most prominent and most successful angel investors in Silicon Valley. Greg was an early investor in Twitter and a friend of Jack Dorsey's, an early investor in Ripple, and a close friend of the founders of that company, Chris Larson, David Schwartz, Arthur Brito. He's friends with all those guys and invested very early in Ripple. He was an early investor in Square. He was an early investor in Coinbase. I mean, Greg's personal portfolio reads like a who's who of the most successful private tech companies out there. And so we were hugely honored to have Greg end up becoming the largest investor in that round.
Wow, that is amazing. And absolutely, his picks have done phenomenally well. And for him to invest in Link 2, I think it says a lot. And that gives you, a lot of just, I don't know how to even say, but it just really, credibility, cachet, you name it. I mean, it's pretty impressive.
Yeah, I'll tell you, and this is probably a great thing to share, right? Because as I said, back in 2019, the truth is that we hadn't built anything. We certainly didn't have anything close to a product, much less a proven product market fit. So it was a leap of faith, to be honest. All we had was this idea and a plan to execute upon it, but that was it. What did Greg see in that idea that was so attractive to him? If you look at his personal portfolio, there is one overarching theme in that portfolio, and we happen to fit solidly under it. And that portfolio is based on this idea that if you take cutting edge technology and you marry it with innovative business models, you can use that to disrupt a lot of very high value global incumbent industries that have made lots and lots of money, have lots and lots of customers doing things a certain way. And that certain way is pretty old, pretty tested, but it's now becoming obsolescent. So if you come in and you rock the boat and you change things and you democratize by opening up a lot of these markets that are dominated by incumbents, you have the ability to create a tremendous amount of value and wealth. He saw that in Link 2. He saw that fundamental democratization play in Link 2 and our company and our vision. And that's what he's bet on. And I'm happy to say that his bet has been proven correct. And even today, if you look at where he invested in and where our company is currently valued, he's already very deeply in the money.
Yeah, that's exactly right. He loves disruptors. That's exactly right. So in the old days of Wall Street, years ago, private equity was something that had a very high minimum. And so it didn't have liquidity. And people had to invest for years before they could get liquidity out of it. And so you had to be an accredited investor. You had to have someone of substantial worth in order to invest in these things. And over the years, that's changed. And you've really already, lowered the minimums for investors to invest in private equity. Now you've started to have liquidity within the system too. And so I want to talk about both sides of that, the laws that may change in the future and how that's going to impact Link 2, but also the ATS and just what you've done to provide liquidity and really change the industry as a disruptor.
So let's talk about the Wall Street that you just referenced, and you and I have our backgrounds in that world too, so we know it well. We also know its flaws, right? One of the flaws of Wall Street's model in terms of private investing, and you see this typified in the structure of venture capital and private equity funds, is that they're intrinsically undemocratic. These are because they're vehicles that are set up for the very, very top of the wealth pyramid, for the very biggest institutions. If you go into a venture capital fund and you want to become a limited partner and invest in that fund, that model requires you to invest a very large ticket. And depending on the fund, it can be as small as 2 million, it can be as big as 100 million, right? If you're talking about VC or PE funds. But those are numbers that are frankly beyond the reach of regular people. So that's one. It's just not talking about access. Second, they are to some extent business models that can be quite extractive of value. And what do I mean by that? If you look at the structure of one of those funds, how it basically works is, okay, Mr. Wealthy guy or Mr. Wealthy institution, you give me 2 million to 100 million of your money, right? And then I'm going to figure out what to invest your money in as the fund manager, right? You have no say. It's the strategy I come up with. You got to trust me that I'm going to execute on that strategy. And while I'm investing, which, oh, by the way, can be 10 years, so you got to lock your money up with me for that period of time. That's the other constraint. You're illiquid for a very extended period of time. During that period of time, I'm going to charge you a fee every year based on the value of your money. And that fee can be, typically 2%. And if I'm successful and I'm able to turn that investment and get a gain from it because I invest, say, in a private tech company that later IPOs at 10 times the value that I invested in, I'm going to take 20% off the top of your capital gain as well as part of my compensation, right? This is my reward for managing your money. I get paid all those fees. I also get to charge my expenses back to you, by the way, for administering that fund. And then I take 20% of the profit, right? That is extractive of value. That's going to be really hard for a little guy to swallow, much less to administer. I mean, it's an accounting nightmare to begin with, right? Being in that type of fund. So we started with a proposition that you got to create a completely different type of animal to serve the needs of this very different constituency, because we are serving not the very, very narrow tip of that wealth pyramid. We are serving the very broad bottom of the wealth pyramid, the people that constitute the mass affluent and they're not poor people, Linda, right? They're affluent people, but they're not the uber rich.
We're not
They're
the one.
just
Yeah.
regular folks, right? And so in order to do that, our business model is different. It's not you give me your money and I'll invest it for you. And if it works, I'll extract 20% off the top. And in the meantime, you pay me all these fees and you lock up your money with me while I'm doing all these experiments with the investing. And oh, by the way, if things don't work out, it's your loss because it's your money, by the way. And it's no skin off my shirt, right? I mean, that's not the model we have. Our model flips everything upside down. Number one, you don't give us your money at the start. We take our own money. We decide and make the investments. And only after we've made the investment do we say to you, hey, listen, we invested in XYZ company. These are the reasons we think it's good. If you want to invest with us, you can participate through one of our investment vehicles. You have no obligation to. You pay no membership fees. You have no economic disincentive for not investing. You are entirely free. And if you invest, we're not going to take 20% off the profit off the top. We're not going to charge you management fees every year that you're waiting for your investment to realize a gain. None of that, right? All we say is, here's the price of the investment. Here's the share price of the company that we're offering to you. And if you like that and you think that's an attractive entry price, you make your investment and you are done. That's it. The next thing is, if it's successful, there's an IPO and you keep 100% of your gains. And if for whatever reason we were wrong in making that investment bet and that company ends up being a complete washout and the return on it is 100% loss, sure, you would have lost your money, but so would we, because we're invested alongside you. And as a matter of fact, we invested even before you did, right? And so when you stop and think about that, it is a complete turning over on its head of the traditional Wall Street model.
Love it. It's so great. And that's how it's disruptive. And so,
Yes.
and so Congress is addressing what an accredited investor is. I've already seen some talk about this. I'm not sure exactly where the bill is, but it looks like it's making its way through to become a new law, and that the accredited investor status is not going to be a high income or a net worth of $1 million outside of your primary residence, but it might be a test. Is this what I'm hearing?
Yeah, there's a bunch of different pieces of legislation, but the one thing they have in common is they're proposing that the rules for accreditation be relaxed. So today in the US, in order for you to qualify to make these kinds of investments, you have to meet the SEC's requirements for an accredited investor. What does that mean? It basically means that you have to have a certain level of income and wealth. So either you have an annual income in excess of 200,000, or you have a net worth of at least $1 million, not counting the value of your home, right? So that's a relatively high bar, and it's great. You know, in the States today, there's probably about 25 million or so people that pass that bar. So that's our natural market at Link 2. But there's also, when you stop and think about it, a whole host of people that may not quite make that bar, but there's no reason why they shouldn't be invested in these assets, because they're smart enough, they're responsible enough, they're mature enough, and they have some level of risk-taking capacity, meaning they're not going to put their entirety of their life savings into private assets. They're smart enough not to do that. But if they wanted to do 10 or 15%, why not? Right? So this legislation basically says, if you're one of those people that doesn't quite meet those financial requirements, but you're willing to take a test, an exam, if you will, study up for it and pass the exam, and that exam is meant to test your level of financial literacy, your understanding of some of the basic concepts that undergird private investing, et cetera, right? Then you pass one of those exams, you should be allowed to be accredited. And so we are strong proponents of this concept and this legislation, and we're guardedly hopeful that in the next 12 months, one of these bills will pass and open up the accredited investor universe to folks that are smart enough, responsible enough, mature enough to take the risk of these investments without necessarily being wealthy enough to quite make the accredited investor financial test.
Well, and the whole point of the SEC's quote investor protection was theoretically because it wasn't liquid, right? So you could invest a lot of money and it was higher risk, but also there was no way to get liquidity for years. So it made some sense at the time to maybe show that people had a high income or had other assets to live on while this was illiquid. But you've turned that upside down too, because now you've made it liquid, you've made the minimums lower, and with your ATS, your alternative trading system, now there's liquidity. So tell us about that and how that's working.
Thanks for asking that question, because that is the other really important distinction between that Wall Street fund model and the business model we have at Link 2. As you rightly say, the investments that you're making at Link 2 are in fact liquid. And the reason this is that when you're investing in the stock of a private tech company in Link 2, that stock is being held by an investment vehicle, an LLC, that Link 2 manages for its members, right? So you as an investor end up buying a portion, becoming an owner, if you will, of that LLC for an ownership stake that is proportional to the share. So if I'm a 5% owner of that special purpose vehicle, that investment vehicle, then I own 5% of the underlying shares of the tech company shares that are in that vehicle and owned by it, right? Well, even though the tech company shares are illiquid because the company isn't on the public market yet and hasn't listed, hasn't registered as a public company, your ownership of that investment vehicle, that membership is liquid on our platform. So we allow our members to trade those ownership units that are tied to the underlying stock of the tech companies, allow them to trade those actively on our platform. And that's how you get liquidity. So if I invest in XYZ company today, and for whatever reason, 3 months from now, I decide that, I need cash for some thing that's happened in my life, I can sell those shares and another member will buy them, or Link2 will buy them from you, and you'll have your cash and be able to fund that life event. Or alternatively, and this is more the case with our members, sometimes, they decide that because the price of a particular stock they invested in has gone up in the private market, they can actually realize some gain. So they take some money off the table. They don't sell all of a holding necessarily, but they sell some of it to realize a gain. And then they reinvest that gain and the proceeds of that investment into something new, another investment that has more upside potential going forward. So if you looked at this month, for example, approximately, I'd say 15 to 20% or so of the transaction volume on our platform has been in these types of sales and reinvestments. So people basically realizing some amount of gain by reselling a prior investment and then reinvesting in something new. That's something that you can't do in the traditional fund model. You're just stuck waiting for those investments to exit in the public market.
That's right. And that's a huge advancement in the industry. It just changes everything. It really puts it in a different class, a different league, a different way that people can access it and have liquidity. And it changes the whole nature of the investment in private equity. So that's really awesome. One of the things that, as Link2 being now just 3 years old officially, that I'm surprised by is your share price is still low, which historically has shown that might be a really good opportunity for people to get in. I remember hearing about studies where one of the most important things about wealth building is to get in at a low price. And we still have that opportunity to get into Link2 stock at a very low price. So can you tell us about the opportunity with Link2 and what's going on with the price?
Yeah, I think that the general proposition that I think you were alluding to, which is that if you invest early, you are more likely to outperform the market in terms of your ultimate portfolio returns, is an absolutely true statement that's proven by lots and lots of market data. Right? If you look at studies that have been done on venture capital and private equity returns, whether you're looking at 3, 5, 10, even 25-year investment horizons, in all of those cases, venture capital and private equity outperform significantly public market returns. Why is that? It's simply because if you invest earlier, in the case of VC, right, which is, by the way, the strongest performing of the alternative asset classes in these studies, if you invest early, you're basically investing at a time when a company's value potential hasn't yet been fully realized. Right? Think about it as a if you were investing in a professional athlete whose athletic career and therefore financial potential is fully realized when they reach peak performance age, which, depending on the sport, can be anywhere from 24 to, say, 28 years of age, right, in sports. If you had a chance to buy an option on that athlete when they were a 5-year-old kid and ride their athletic development all the way to the time when they're playing as one of the best players in a professional sports league with the full value potential, meaning they've maximized their salary, they've maximized their endorsements, they've maximized their share of broadcast rights, on and on and on, right? I mean, you get a much better return investing in that athlete when they were 5 years old than when they were 25 years old. Private companies are the same analogy. If I'm investing in, Apple when they are 5 years old and still a private company, as opposed to Apple on the public market 2 weeks ago, guess what would have gotten the better return, right? So it's a really simple idea. The problem is that for regular people, it's historically been really tough to actually execute on that investment strategy. Why? Because the investment vehicles were not constructed to service the needs of regular people. And that's why we created Link2, to address that need. So today, through Link2, that regular person can participate in the same venture capital market that previously institutions only had participated in, and which have represented the strongest performing segment of investment over the 3, 5, 10, 25-year horizons.
I love it. So where do you see Link2 3 to 5 years from now?
I think we'll definitely be a public company. I think we'll be several billions in valuation, and we will be the preeminent and the largest private market investing platform that services the broad bottom of the wealth pyramid. We will be the democratization factor in the private markets.
Wow, I just got goosebumps. That's awesome. Thank you so much, Joe. This has been a pleasure. I learned so much, and what a bright future Link2 has. I'm so excited for everything that's going on there, and to be a part of just the investment opportunities that you have on your platform. It's just really exciting to watch and participate in. So thank you for everything you do.
Thanks so much, Linda. And, I should thank you as well. And if I can say a few words here, because I think it's important. What you and people like you are doing is terribly important to the broader mission of democratizing markets. And that is education. I think you're singular and distinct in your approach, because that's what you're doing with your followers. You're educating them, and as a result of that, turning them into better and better investors. We very much share that philosophy. I think that the best investor is the educated investor. And so we put a fairly significant amount of time and resource and bandwidth at Link2 into helping our members grow by becoming smarter and more educated investors. So if there's anything I can do, certainly in terms of helping you with more data, more insight, more knowledge about Link2 and any of our portfolio companies, please give me a holler, Linda, because that's something that is going to be as important to us as it is to you, making sure that you're able to give your followers the best quality investment education there is.
Absolutely. Will do. Thank you so much, Joe. It's been a pleasure.
Okay. You're welcome. Take care.